Hello everyone. In this video we're going to be talking about units, multi-unit trading, and also what that means in terms of the trading technique that I'm labeling limited stretch and reverse. So we will get through the details of that with some slow motion examples of what that means. There are videos of live trading on the website, so this will just give you some very slow motion, making sure you understand each point in the trade, what actions are being taken, so you can get this into your brain. And so when you watch the live um, video, then you'll know exactly what's going on. And it'll take a few attempts to be able to go back and forth here, just to make sure you're completely indoctrinated into this trading technique and how we're almost doubling our profits with this trading technique. All right, so let's get started. First, what's a unit? A unit is just really the number of contracts you're using to initiate a trade and add to a trade if necessary. All right, so a unit could be one contract, two contracts, four contracts, etc. That we'll get into in just a moment. So how many contracts should you trade per unit? And this is really based on your account size and your personal tolerance of risk. So everybody has to make their own decisions, right, about their account size, what they're using here, what their risk tolerance is, if they freak out easily or not. So that's all a factor of what you're good. I do have some suggestions, but anyway, everybody has to make their own decisions. All right, so different contracts mean different units, right? So far as the E-mini is concerned, the E-mini has a $400 per contract day trade margin, right? Just day trade, and then I'm quoting AMP and with CQG here at $400 per contract. The E-micro is that divided by 10, right? So the E-micro has a $40 per contract day trade margin. All right, so again, emphasizing that using the limited stretch and reverse method, right? My suggestion, but of course you can make your own. I would not necessarily go more aggressive than my suggestion, but you can go more conservative if you wish. Just because we're using the limited stretch and reverse method doesn't mean you need to trade multiple units, right? So for instance, with single unit trading, right, one E-micro contract could be traded for a $1,000 account size, and one E-mini contract could be traded per a $10,000 account size, right? So if you're going to double the unit to a 2-unit trading, then those numbers would need to double as well. And this is what that would look like, right? So for the E-micro, right, 1K, $1,000 account, you should be trading single unit trading, right? And you should be trading one micro. If you have a $2,000 account, right, you should be trading, and you wanted to choose to trade multi-units, right? You could trade 2 micro contracts per unit, and just it scales up. $4,000 account, you could trade 4 micro contracts per unit, etc. Now I chose just to use the even numbers. You could do odd numbers as well, like for a $3,000 account you could trade 3 micros. You just have to make a decision on your exit points, and we'll get into that a little bit later. For the E-mini, it's the same, it just scales by 10. Right, so for a $10,000 account, you could trade 1 E-mini contract, right, which would be single unit trading. $20,000 contract or account, you could trade 2 E-mini contracts per unit. 40,000, 4 E-mini contracts, etc. Okay, that's just the way those scale. Very straightforward. All right, so let's just talk about at a very top level, the limited stretch and reverse method. And what I really mean by limited stretch is trades can go against you, initially before you get out of your contracts or even all of your contracts. And so we don't want to bail too early, right? But we don't want to stretch it forever, in which case we would need a larger contract or larger account size to be able to do that, right? So we will stretch some, right, as we watch the trade progress, but not forever, right? If we make our decision that this trade is going the other way, right, then we will reverse and we will manage the trade in the reverse direction. You could always just stop out and accept the loss as well. That's not what I do, and that has a tendency to be kind of a back and forth kind of a profitability on a day-to-day basis as well. So that's not what this method is going to do. Okay. All right, so the trade starts by using the master strategy, as said in the video examples. So refer to the real-time videos to be able to do that. We're using the master strategy, especially for multi-unit trading, so we can set different profit exit points. Okay, so we're going to try to trade with the trend and with the highest win probability entries. Makes perfect sense. We're going to set the master strategy for the desired profit levels. We'll see that in a moment. And once we have put the trade on, we'll watch for exiting at profit levels, right? If it's coming up and hitting, etc. Or possible additions to improve the position average if appropriate. And what I mean by there, if we have stretched it some, right, we're hanging in there with the trade and it seems to be going in our direction, and we think we could add a unit to it. Sometimes I even add more than one unit if once it really starts to move in my particular direction, right? And we'll adjust the profit targets as appropriate. All right, but if the trend appears to be changing, right, we just don't have confidence that it's going to bounce right in our direction, and it appears that the trend is going in the other direction, then we will pick the point to reverse. When we reverse, we have to reset the profit levels for our exit, and then also look for opportunities to add to the trade in that particular direction, right, for earlier profit exits. All right, so that's kind of the strategy in words, and let's go through the mechanics of what that would look like, and you can see it in real time as well on the video. Okay, so in slow motion, right, we can take it one step at a time. All right, this is just an example of a good first entry. We didn't need to do anything to it. It just got us out of the trade with money. And all of these are going to be examples of long entries, right? The short entries would be the same, it'd just be in the opposite direction. Okay, so we have, and this is my little squiggly line in what the market is kind of doing. Okay, I didn't try to draw bars or anything like that. So this is just as kind of a squiggly line of price action. All right, so we think the market's going up, right? So we placed a long entry at 100. I'm using really simple numbers here just for ease of math. All right, so we've got a long entry at 100. All right, so when we do that long entry, the master strategy is going to automatically place our exit levels. All right, so we have a first exit at 3 ticks, which is what I'm currently using, but you can make your own decisions here. So the first exit is at 3 ticks. The second exit for the second unit, right? This is a multi-unit entry, is going to be at 4 ticks, which is going to be 101, right? So the master strategy is placed. It placed the stops as well. The stops are down would be, you know, like off the screen, but the master strategy would place your stops as well, right? So after that, price, you know, it may wiggle around. It may pull back a little bit, but not so much that we would need or want to add to the trade. And it comes up and gets us out of the trade here, right? And so so once we're out of the trade, right, we're out of the trade with money of both levels. And so at that point, we would want to record our profit for the day, right? So I always write down what I have made for the day, right, just in case I run into the reverse scenario, and we'll get into that in a little bit. So this is just a simple example. We made a multi-unit trade, didn't have to do anything else, and it just gave us our profits. All right, so the next one is going to be, again in slow motion, we're going to place a long trade, but we're going to observe the market, and it looks like we might need to add to it. All right, so once again, here's the market action. Same as before, we made a long entry at 100. All right, so the master strategy, place the exits and the stops. But in this case, right, it looked like the market was coming back down more against it, right? So it looked like we may want to either add to it and or potentially reverse, right? So in that case, I turn the master strategy off. The reason I turn the master strategy off is just in case I do want to add to it, right? I want to individually place my exits where I would make money on the trade, not at the 3-tick and 4-tick level that the master strategy would place them at if I had left it on. So hopefully that's clear. So just double check the real-time videos in the room action and listen to me trading it in the room to make sure you understand that. So I turned the master strategy off. Right, so then it looks like it's coming back up. So right, I took a second entry at 98, right? And where I would take this the second unit price wise is completely and totally immaterial of 2 points and all that kind of stuff, right? I'm judging the market and what it's doing. So in this case, I have made a second long entry at 98, right? So for another unit, right? So in that case, right, I now have a position average of 99, right? I made an entry at 100. I made an entry at 98. So my position average is 99. Now, this is simple math. The dome will always tell you what your position average is, right? So it's on your dome, you'll be looking at, kind of like the white area on your dome. That is your position average. And it's where, green meets red, right? In that area is going to be your position average, right? So I've made a second entry. I can see that my position average in the dome, right? So now I need to adjust the exits for the new position average and also to maintain stops as well. So what I do, the first thing I do is I see my position average, I see the profit that I want to go for, and now I have to manually place at least those first two levels, right? And you can combine levels, etc. So I'm going to be, I would be placing these two manually, right? So those twos I would be tracing manually. These would probably be up higher, maybe my graphics are off a little bit. I would just be grabbing those and just moving them down a few ticks, right? And so I would be, adjusting the dome that way. All right, so now I've got my position. I know my position average. I have my exit levels set. You can manage the stops as well. In that case, you would need to add some stops down here below. I usually focus more on managing my exits and I'm watching the market, etc. But if you want to add to the stops, you may. All right. So after we add to that position, right? In this case, market came up and got us out, right? It would have to go through all four levels, right, or fill at all four levels to be completely out of the trade. In this example, I'm saying price does move up and it exits all levels, and we're out for a profitable trade, right? So I'm saying now we're out of the trade, but we also need to manage the dome, right? So if we manually added stops on the dome, right, then we need to make sure that we have canceled those stops, right? So your dome is going to say flat, but if you manually entered stops, then you're going to have some stop markets in the dome. So you just cancel all, right? So you always need to make sure you're the master of the dome. You don't want to get any surprises on that. So you're out of the trade and you've made money on this trade as well. And once again, you're going to record the profit for the day, right? Because you need to know how much money you have made that particular day in case the reverse scenario hits, and or hey, I've made my profit target for the day. I'm stopping to trade. All those type of things. Just record your profit. Okay, and so the first levels. Many times, right, the first level or first couple of levels in this case may be a small loss, right? Because the position average, just because the position average is, right, our first entries are probably going to be below the first entry that we made. Maybe this is not a great example. Maybe it's a little bit lower than that. So you could see the red line here for the first one, first two, something like that, right? But then the last one are going to be even higher profits. And so as long as you're getting out above the position average of everything and you get out of everything, then you will have made money on the trade. And we've talked about that before. So any questions on that, make sure you're getting them asked and answered during support sessions, etc. Okay, so once again, we've recorded the profit for the day. All right, so here's the reverse. This one gets a little bit more complicated, and the reason that we need to use the order and position tracker window and those sorts of things, right? So here's our first entry again, right? So same thing, entry at 100, right? The master strategy places the exits and stops, right? Market kind of goes down against us, right? This is the exact same scenario as before, right? Second long entry at 98, right? Position average is 99, right? So we're long 2 units, 4 contracts. We're using, in this case, we're using a 2 contracts per unit kind of a scenario. All right, so just like before, right, we manually place the first couple and we drag down the last couple of exits, right? But in this case, we did not get up to any of our profit targets, right? Now, it's also possible that you can get out of 1 or 2. That's also possible as well. So in this case, we're saying we did not get out of anything, and the market suddenly came down. We don't like it anymore, right? So now we've, in this case, I cleverly said, oh, we even made a lower low. So now we've made our decision, right? And we have decided to reverse, right? So this is where we become more active traders than we were before, and we need to be on the ball a little bit more and know exactly what's going on. So first of all, we've noticed using the E-mini, and so now our position average, you can see on your dome, your position average is now 96. It's going to be whatever it is at your reverse point. That's going to be your new position average, right? So any tick down, in this case, is going to be, you're going to be in the green, you're going to be making money. Any tick up, you'd be further in the red, right? But you have to realize that it's starting from 0 at this position. You have to realize that when you hit the reverse button, you have booked some loss, right? So that's why we're going to look at where our profit levels were for the day prior, right? And we're going to look at the order and position tracker window on what our profit level now is. And in this case, the difference in that is going to be $600, right? So you just do the math, right? So we made we had 2 units, right? We lost $100 here per contract, so that was $200. 4 points here on 2 is going to be $400, right? So those two together is $600. Okay, so we've got $600 from the reverse, right? So and this is our position average. So I just don't want to make some money on this trade. I'm initially going to try to get all my $600 back plus my trade profits. So initially, right? So I've noted the reverse, and so initially I've got 4 units. My my exits are going to be down here, right? So if the market comes straight down, sometimes it does, then here's now my exit points since I am short. But we have to manage this trade and see what opportunities are for us to be able to do it. So it comes, it's kind of going sideways for a while at the position average, and then it's starting to make another leg down. So we're at this point, we're glad we reversed, right? And we're watching it. And we have high confidence. Maybe we're getting some expansion bars, we're getting some selling, etc. So we made a decision to add a unit, right? So added a unit short. So now we're going to be short 3 units, right? Not just 2. So we've done that, and now we need to adjust the exits and stop again, right? So at this point, our profit level to be able to get our $600 back and make money is going to be higher, right? Because we've added to the trade short, it's moving in our direction, and so I've kind of noted that here because I have 6 individual exits, right? And you will hear me in the room, right? If it's coming down quickly, maybe I have them spread out that way. Maybe I have them spread out 6 different. Sometimes, though, I might choose, especially if there's a support level down here, I might choose to get out 2, right? In 2, in 2, right? So sometimes you'll hear me in the room say, okay, I'm set up, 2, 2, 2, or maybe I'm set up 2, 1, 1, 1, 1. Something in that neighborhood. So I'll tell you what I'm doing. You have to make your decision of what you want to do. So if it comes coming down quickly, I just may let it go. But many times, I at least want to get out of some, right, at my profit point. If it's coming fast, like I said, I'll stretch them out. If it's anywhere around, in this case, the support level, maybe I will bunch it up. If it's spending some time down in here without filling, maybe I'll take this one and drag it up, right? All those things are possibilities as I judge the trade, and of course you can have your own opinions as well. So in this case, right, we've added 1 to it, 1 unit to it after we were short 2, right? And the market came down, right? And so we exited all the trades. We're out of the trade. Again, we need to manage the dome just in case we put any stops up here, right? And record the profit of the day. Now remember, when we have hit the reverse button with the master strategy off, it's just going to give us a position, right? We have to place all of the exit levels manually, right? And we have to place a stop in the market as well. A conservative stop in the market as well. So we have a stop in the market. And this is an individual decision. I'm first focus on my exits and then a stop. A lot of people say, I want to get protection in the market. And so they would say, oh, well, I need to get my protection in the market, so I need to get the stop in first and then the exit. It's a personal decision. I want to get exits in the market because those are limit orders. I want to get into the exit queue as quickly as I can, especially if the market's kind of fast, to be able to do that. So, but anyway, however you choose to manage your dome, you need to manage that when you get out of the trade and you've added stops to it. You need to make sure that on your dome you're both flat, right, and that you don't have any orders in the market that you need to cancel, right? If you do have some stops in there, then your cancel all button on your dome will be highlighted, right? It won't be grayed out, in other words. So if that's ever the case, then of course you're going to want to hit cancel all. And if you happen to make a mistake, and I have done this before, and you didn't have you forgot to place some exit orders, right? So you have more units, for instance, down here, right? If you have more units, it happens sometimes if it's really come in my direction, and when it's relatively close, I go ahead and add yet another unit to it. and then I forget or I misquote or mismanage putting the correct number of exits on. Sometimes that even works in my favor. I'll look at the dome and say, okay, I don't have any exit levels, but then I'll say I've got a unit or whatever running on the dome, right? It won't stay flat, and it'll still be red and green. And I'll go, oh wait, what's going on? And then I'll have to come back and I'll have to place those units on the thing. So you always need to watch the dome, make sure you're flat, and make sure you don't have any contracts orders on the dome, i.e. stops. All right, so you're out of the short trade again, and you record once again the profit for the day, so that you're set up for the next trade as well. So I'm hoping some of these mechanical kind of points in these trades help, right? So once you have the mechanics straight, then I think going back through real time would make more sense, and just go back and forth between these two videos on the mechanics and the live versions as well that is available on the website. All right, so watch it a bunch, and we will see you in the trading room. Have a great day.